So today I'm going to be breaking down an Australian dollar Japanese yen trade that I took last week from the 8th of June to the 9th of June. I'm going to be completely breaking it down on how I entered, when I entered, why I entered, and then also when I exited and why I exited. So as you can see, this is the trade that I had. We had a 1 to 4.85 risk to reward ratio, and we also had a 40 pip stop for 190 pip game, and we're just going to break that down. So to start, we're going to go on to a different chart, a clean chart, and here you go. As you can see, I've already mapped out the two trend lines that I had bullish wise, and I had these two trend lines for a specific reason. Now before we were in the sells, we had buy orders from around this area too, and we targeted this specific recent high, which was before the pandemic, and as you can see, that recent significant high, or TP, that we had was hit. That is not the trade that I'm going to be breaking down right now. We're going to be breaking down the sells that we had last week, so let's get right into it. So I'm going to use the replay tool, and we're going to go back to before it hit our TP for the buys, and we're just going to let price play out for a little bit. Here we go. So we're going to jump onto the 1 hour time frame, and at this point I had drawn my trend line just like so, and I also had a upwards trend line just like this at this time being. Now the reason I had this channel going is because I was either waiting for a break of the upside, as well as the recent significant high, so price could keep on going up, or a break of the low channel line, retest a resistance, support, even the same trend line, for price to keep on going downwards. Now obviously price went downwards, and we're going to break down how I entered into that and why I entered to that. So if we just keep on playing the replay and skip along a little bit, as you can see, at this time price broke above, even on the 4 hour. As you can see, it started to wick below, and if you go back to the 1 hour, we play it, there we go, big bearish candle, rejection, showing signs of reversal, as it's engulfing candle, as it's on the 1 hour too. It must be a big area of resistance. So as you can see, big signs of rejection, big signs of a big area, so we're trying to keep away from there, and price is showing signs of reversal. So if we just keep on playing, as you can see, we have come to this support area, and price has wicked above it again, also rejecting this area too, and if we keep on playing, as you can see, it's still rejecting that area. In fact, now this area is a bit bigger, using this resistance as well, and we also have the 1 hour 40 MA. Now at this point we're waiting for a breakdown to the downside, and then a sort of a retest of a support or resistance, and then a candle entry on the 30-minute, 15-minute, to get the best entry, and then we start planning out our trade, putting our stop losses in place, putting our take profits in place, and as well as entering. So if we just skip along again, as you can see, a little bit of bullish momentum, still trying to follow the trend line, and then a big bearish engulfing candle, showing more signs of rejection, and then the break of the trend line. Now the reason why price started to come up here, as you can see, is because of this 40 MA, as well as the supports here. Price had to make some space between the supports and the 40 MA, as this level was way too strong, as you had the 40 MA, you had the trend line, and you had the supports, so it just had to come away, and then eventually break the trend line. Now this is the importance of using alerts. I had alerts for this trend line. Every time it passed this, every time price passed this trend line or this ray, I got an alert. And then eventually when the candle closes like this one, I start paying heavy attention to the charts or that specific chart, and I wait for my entry or start planning where the best entry I could get. So as you can see, we have a bullish candle, and I look left, and as you can see, we're retesting this resistance area, and so I jump onto the 30-minute, and this specific candle here is showing me that there's signs of downwards momentum as well as upwards momentum, but it's wicked into a zone and finished so far below. In fact, that is about 7 pips below where it's gone, and it just could not close above there. With the reasons all adding up for to take sales, I'm just waiting for that candle entry, that big bearish candle or signs of reversal that I could enter into, and we're on the 30 or 15 minute to see what specific candle I could enter on. Now, confluences we have, or reasons to get into the trade, we have the break of the trend line. As you can see, we could have moved this trend line down to here. We still would have, if I just do that very quick, there we go. We can still see that prices are wicking above the trend line and still closing below. Even more reason to take sales. So that's one confluence. We have the confluence of rejecting the recent significant high that we had, that if we go back again, we can see that is a hard price to break. Even in last year May, it could not be broken. So that is another reason. And then our last reason is the entry candle. Now as you can see, this is the entry candle, a big bearish engulfing candle that closes below an area of support or retest it, and this is the reason why we entered, as that is our third reason. I like to keep my trades to 2 or 3 reasons if possible. 2 is alright, but the more reasons you have, the better position you put yourself in to get into a trade. And so for our stop loss, personally I put my stop loss right here, above this high, just a little bit above 38 pips. However, you could have put your stops at this level too, which was a 50 pip stop. However, I had the intentions that now we broke this trend line, we're just going to keep on going downwards, and you'll see that eventually it does play out. So I put my stop loss just above that high, and yeah, that was our stop loss. For our take profit, I specifically like targeting recent significant levels, and so the first, or the recent significant level I see is down at this wick. So I have I have recent significant low, and so I put my TP down here. I will have the recent significant low and recent significant high plotted out before I get into a trade, or before I get even into looking into getting into a trade, just so I know where price is in the scheme of things. It also gives me the opportunity to see if I've missed a trade or not. But now I've targeted this recent significant low, I changed this to TP overall just so I know, and yeah, that's it. Then next, if we jump on the 1 hour, we can see that this area right here is an area where price uses a support. So I drew a support line right there. If we change this to support, sometimes I use blue lines like this labeled support, or I use just a black thin line depending on how key the support level is. And so this one wasn't very important to me. I just think this as a level to bounce off of to go further up. However, this area here strikes of key interest because it's a resistance, and then it's also turned into a support, and we've got one bullish engulfing candle here, and then another bullish engulfing candle here. Could also call that tweezers. And so this level here interested me quite a lot, so I put just a box there to alert to me that that area is more significant, especially compared to this area down here. And then I also had a black line just above, just so I could put an alert, so we can actually I added an alert there just so when price comes down to that area I know to start watching the trade, see how the price reacts at that level. So now if we just play on, as you can see we'll have two bearish large bearish candles, and in fact we went into around 70 pips of profit in the first 2 hours of the trade. However, you can see this large wick which covers a majority of our profits that we had at one point, potentially halved, and so now we're around 45 pips, 45 pips you can see. And in fact this wick actually quite left me wondering if this price, this area could break, and so I just started watching the charts every half an hour. I started watching the at the end of every half an hour I would look at price, see where it is, and as you can see price started to come up. So at this point I was thinking whether price could retest any levels, and so we have this level here, and also it's quite close to this level. So I was thinking stops at break even isn't a very smart idea, because the spread could potentially put us out of the trade. However, you can still minimize your stop loss. So in fact I put it below the recent significant high because I had the intentions that if it breaks this recent significant high, eventually price is just going to keep on going up. So as we play it along, I have this area just to see what price does, and as you can see a big bearish engulfing candle, and it kind of just ranged a little bit, and then it broke above. So at this point I set an alert at this area here, just where this box is, and I put this as a key yellow, just so I know that this is a key area that I have to start really deciding what to do. And as you can see, price eventually came quite close to the level, eventually hitting it once. However, the doji candle kind of shows me that price doesn't even know where it wants to go, but it also shows signs of reversal. And as we've got this bullish kind of flag going on, prices broke this bullish flag, and we're starting to give more reasons to go down. And as you can see, straight after this 30-minute candle, you can see the flag is now gone. The bullish flag of the bearish momentum is gone, and this gives me even more reason to understand or to know that we're going to keep on heading downwards. And as you can see, we get round to this area that I said was important. We wick down below, however we close in that area, and we have a bullish large bullish candle, and then we have an area of consolidation. Now usually when price consolidates it reverses, but if we keep on playing, there's a specific candle, this 30-minute candle means a lot, because it shows that price was trying to hold this area, really trying to hold this support. However, the doji candle straight after this bullish candle shows that price can still go down, and it has the wick to go down, it has the area to go down into, so we're really this candle is very important. And as you can see in the next candle, this is the reason why I didn't exit the trade. I was going to exit the trade as I see it's in consolidation, however I didn't, and at this point I could have moved my stops to break even, as I had the intention that it's gonna have a lower high than this, making lower lows now. In fact, I want to change that to this. So as you can see, we're heading down, but this candle was very important for me to understand that price can still go down, and so I just stayed in the trade. I trusted the trade, and we see how it plays out. So as you can see, we broke it. Now this break actually ended up getting us towards the 80 pip range, which is quite close to the 100. In fact, it was close to 90, so just 10 pips away from 100 pips. And we also have quite a lot of range to go into, or quite a big area to go into to hit the next support level. So as you can see, price then retested the area of importance, which was before a resistance area, then turned into a support, and price just had a big bearish engulfing candle, and it just kept on going. Now I hit this level, but as you can see, it just broke straight through, didn't do much, and then we had these candles here. Now these candles was at the start of the London Open, and they were quite important because as you can see, what I'm about to draw right now, which is what I realized at the time of the trade, as you can see, we're wicking into the area of the recent significant low, but we're not touching it. Now this to me shows that price may not hit the area just yet, and it may not hit it at all. So for that reason, after this 30-minute candle closed, I was then out of the trade. I closed my trades. I didn't leave no runners. I just closed for the full 160 pips. Let me just show you that is 160 pips. There you go, just above the close, but it's 167 pips. I actually closed for 165 on the dot, but I could have closed at like nearly 170, around that mark, and that the reason why I got out is because I didn't have the confidence that we were going to hit this area before going back up. So if I wanted to actually hit the area, I would actually have to hold a bit of, not drawdown because we're in profit, but price would have to wick up and then retest and come below this level, which is what happens if we skip to the 1 hour and just fast forward a bit. As you can see, we start going up, and we sort of try to hold this area, and then we eventually come down, and also we broke this trend line, which also had me a bit worried too, but if we move it on top of the wicks, perfectly fine. I don't like moving my trend lines too much, and I don't like having my trend lines on wicks, but as you can see, it eventually did hit our take profit, but we got out on the 165 pip area, because of the amount of wicks that was happening. And that is the trade. But that is it for this video. Make sure to press the like button and follow us on Instagram as well. Put us our post notifications on to keep updated with all forex related news, as well as all our forex related breakdowns.